Hello everyone, Dr. Stock, Doctor of Education. I got my unicorn back here behind me. I am in desperate need of a haircut, but with the market being as exciting as it is, there just hasn't been time. Fingers crossed on this weekend that I finally get that done. I do want to talk in this video about what's going on in the markets, about the way that company stock prices are responding to the news that comes out, and the fact that we've kind of been in a place that felt like this before, and what that followed up with and how that felt. So I'm going to talk about the feelings with the market and the sort of psychology that goes along with it, and where I see the markets going from here over the next month and what follows in the month following that. Just a reminder, down in the description is a link to my Patreon if you want to support the work that I do here and also get access to my research, my Patreon exclusive videos, and my private Discord and chat with the community that's over there. That link is down in the description. Go ahead and click it. I'll wait here for you. Sign up. You won't be sorry that you did. With that said, I am Dr. Stock, Doctor of Education. Let's get right into it. It was a time of easy money, easy speculative growth. Yes, there was a lot of concerns about health and about supply chains, all that kind of stuff. But with the federal funds rate near zero, also lots of stimulus coming out from the Fed, we had a lot of quantitative easing that was taking place. There was really, it seemed like all this news that would come out, that would be good news for a company. We would see the stock price shoot up and we get crazy volatility coming out of it. And the bad news wasn't always so bad. When we fast forward from that into 2022 and we watch the sort of sell-off that we had where all the good news didn't really seem to be great for us and all the bad news seemed to be really, really bad, we just started selling off and we had this horrible downturn throughout 2022. We are looking at the Qs here, by the way, which does track the NASDAQ 100, so keep that in mind. But the point here is the feelings that was behind all of this, the euphoria that we experienced in the stock market anyway for 2020, for 2021, and then the sort of downturn that followed through 2022, end of 2021 actually, through 2022, and now finally 2023 comes, and there's hope. We have inflation, which is no longer peaking. Instead, we have it moderating, even if it is a bit higher. It's like we know what to expect, and it's like, okay, we can deal with this. And then we have numbers coming out, such as the CPI, which should have been pretty terrible for markets, and the markets kind of shrugged it off. So the bad news wasn't so bad. And we saw that in 2020 with the markets. We saw it in 2021 with the markets. And then here we are in 2023, and the good news that we get ends up being very, very good. Like I said, bad news, again, not so bad. Somehow the market tends to turn green anyway, even when we expect it to turn red. So with that different sentiment on the market, we could possibly see more upward pressure from here, at least over the next month. So February, as I said in one of my previous videos, I think February could be a really good month for us, especially if we keep on getting positive data about the strength of the consumer. We want them to remain strong in the near term. Now, I realize what that does to inflationary pressures. I'm not speaking of that right now. I think over the longer term, that could help inflation stay higher longer. My point here is about over the next month, strong consumers would decrease the risk, at least in the near term, for such thing as recession. So we want to keep watching that happen, such as when we got retail sales coming out showing that the consumer is strong in January. That was a good thing for the markets again. That's the way it was interpreted, and the inflation thing wasn't really something that people were too afraid about the economy being too hot. Jobs reports, not really shaking the markets, not really rattling them. So that is another case that we have going on here, that what we see is a little bit more bullish behavior going on. So even though we might not be in a full-fledged bull run, that we still might be in some sort of bear market rally, I think there's more levity to be experienced in the markets, at least for the rest of the month of February, possibly into mid to late March. I think that story might change as we get Q1 reported earnings and economic forecast coming out from companies. So we're going to have to watch and see if Q1 is something that finishes strong for us. So for the next few weeks, we could possibly see sideways movement in the markets where we trade up and down. Maybe we bounce off the 200-day that we have here in other areas of support and resistance. Maybe we continue just a little bit higher and we retest some of the other highs that we've had recently in the market. Maybe not move on to new highs. I think that'd be crazy. But also, I don't think that we're going to see the lows that are there either. And the most recent lows that you can see, the double bottom that we have going on here on the chart for the Qs. With that said, I want to talk about the price action that's at least expected, assuming that we do see more positive economic reporting, that we don't see any surprise amounts of inflation to the upside. And if we see surprise amounts of moderation where inflation is coming in even lower through further reports such as on March 14th for the next CPI, and I'm going to put that research on my Patreon. So if you are joining that Patreon, be on the lookout for that documentation, for that data to come out. And I'll also give my commentary there first so that people can plan early. We can discuss that and see what we want to do about it. So for the next several weeks, I think it is very possible that we see a lot more levity in the markets and possibly retest some of the previous highs that we've had. And I do not think that we're going to retest some of those lows. I think we're going to have some very good solid areas of support, along with that continued narrative that inflation is moderating. So as long as it doesn't go super hot on us from where we're currently at, we should be in good shape. We're going to have to watch the CPI from March 14th. I will share my research on that over at the Patreon. So I think February could be very, very good to us in the markets. I think we end February in the green. I don't see a lot changing between now and then. Of course, we do want to watch GDP as it comes out. Fed minutes, we want to watch them when they come out. We have personal income and outlays. We want to watch that, the final report for consumer sentiment. So there are things that could absolutely change that sentiment right now. I just don't know. It feels way too much like the good news is very good and the bad news isn't so bad. And that feels like bullish behavior in the markets, or bullish behavior from the markets. And so I think that we do continue up from here. We're going to have to watch and see. Black swan events aside, who knows what's going to happen in the markets. I certainly have my opinion and I have reasons to believe the way that I do. And that's what I'm sharing with all of you. Nothing really seems to go so wrong, even when it's not good or not great. And while the things that are good are very, very good, that feels bullish. End of March, leading into Q2, especially as earnings come out, that could change that story. I do want to talk about some support and resistance on the Qs here. So let's get into it just to see what we have, at least from a support and resistance perspective on this chart. So this orange line that's right in the middle, that's the current price, closing at about $309. And so that sits right about where we're at before. So that right now that's sort of at a resistance level. It needs to break up above in order to find it as support. Now that is fairly weak support. There's really not a lot holding that up, but there are some pretty cool things about this. It looks like from this chart, you can see other peaks that it matches up with. Let me grab a horizontal line. There we go. And we're going to extend that across just so you can see a little bit more. And if I zoom out some more, and maybe I can extend that line some more, there we go, all the way across. Do you see those two areas, those two previous bottoms that we've had? It's not coincidental that we found resistance right there. As a matter of fact, pretty heavy resistance to have those two separate areas that the chart's sort of even sitting on for previous support. So that is a key and critical level for us. It's not just this single peak that we had back here that likely did peak out because of what we had. Now, we can do that with other horizontal lines. We can do that with this previous peak that we had here. And again, we'll zoom out and we'll carry that across. So not only are we at the top of this peak, but if you look back, we have this bottom, which isn't so bad, but this previous peak also being that sort of area of resistance for us and where we tumbled back down. So if we went very, very far up from here, which I don't expect, right off this peak that we have, this valley, if you want to talk about it that way, that would be just, we're not going to see that. I mean, there would have to be just some crazy action taking place. I do think that it is possible that we come back up here to this middle line. So let me get to this resistance that we have here, and we'll keep this area as well, because I think that this shows us the area of resistance where we'll find those prices settle at least through February. And like I said, we're going to have to look into March. We're going to have to watch the reports come out. But under the idea that the good news has been very good and the bad news hasn't been so bad, that feels like bullish action is imminent in the market. So that's currently what I'm thinking about that. Even if we do get that sell-off, even if we do hit recession, that we see that sort of slowdown in the markets. And just so you all know, I'm not very coordinated. When I draw on these charts, it always takes me a while. If you really want to see something hilarious, sometime I'll have to find somebody's device, somebody's computer to actually live stream me playing like a first-person shooter or something like that. I promise. Like, I don't know if any of you play it at all, but I promise I will be the worst, most frustrating or hilarious person that you've ever watched play those games, because I will look like I have no clue what I'm doing, and just anybody else who's on that map will absolutely own me. I was a long-time video gamer. I haven't done video games or played video games for quite a few years now. I promise I was bad at first-person shooters back when we did LAN parties, when we used to have to carry our computers to other people's houses and hook them all up with wires, not wireless. And there we played on a local access network. That would be the LAN party. And like I said, I was terrible when I was like 19, 20 years old. And, 2 times that amount of life later, because I'm 40 years old now, I'm still no better. As a matter of fact, I'm probably much worse. Let me go on from there. So I think this is the area, this is the critical area for us where we'll find the top of that bullish price action. So bottom to top from about where we're at. So if I grab this tool right here, this will tell us about what price range to expect. There we go. And set it down. So from our current closing price to my most bullish case in the near term for the NASDAQ, or this is actually the Qs that we're looking at, I think we have about 7.5% where we could peak out in the near term. So assuming that all the news stays neutral to good for us, and assuming that I'm right, that we are in a bullish type environment, that could be very, very good for markets. I don't think that we break over this peak, though. I think that we have a sell-off that takes us back down past where we're currently at. Maybe we come back down and test this area down here. Let me grab this line. I'll put another one out. This is just easy enough to move this down. Maybe we come down as far as this. At least, again, in the near term, we could totally test that support, or maybe we would come down to the 200-day, wherever that ends up landing us. It'll likely probably be a little bit higher anyway by the time we'd actually have time to come back down. And that's assuming that we go status quo, that how we are right now is how we stay for a little while. There could be sell-offs in between. I don't think we make a straight 7.5% shot. I think we could possibly come down to this line that I have here on the screen for you prior to moving back upward again. We're going to have to watch it take place. January was already incredible, and we already have extended price action. So, like I said, that is my most bullish case that I have over the next month for the NASDAQ. So here we're looking at the SPY, and I did just want to share with you a little bit. Look at the orange dotted line that we have across the screen at the current closing price of 413. We have all sorts of support and resistance all through there. We might not get a lot of up and down movement, at least not easily, with the SPY moving forward from here. So the S&P trading like it does. Let's go off this bottom that we have here, and you'll notice just how cleanly it goes across the top that we have, and that is sitting right at about that 420 for the SPY, which is about 4,200 for the S&P. And if I grab another horizontal line, and I'll go off this peak, and we'll come out this way with it, just to see the amount of the distance that we have, that we could experience some bullish action coming from the SPY. And we'll grab our tool that shows us just how much that is. So from peak to peak for the SPY, from one area of resistance to another, we have about 2.36%. If we come down to the current price that we're at, that gives us room for about 3%, again, for my most bullish case that I have for the SPY. So it's a little under half of what it is for the NASDAQ. With the SPY, it's a little bit better. I do think that there could be some settling, maybe some sideways trading, but if the month of February is good to us, and at least the first half of March is also good to us, and that it does continue to be the case that bad news isn't so bad and that the good news is very, very good, we could continue to see a rally taking place in the markets. So let me summarize. We have a lot of positive sentiment in the market right now, that the good news seems to go very well, the bad news sort of gets shrugged off. That sounds like a bullish environment. We're going to have to watch it as it plays out. I don't know for sure that it's going to continue to be bullish, but I suspect that over the next several weeks, we could still see that bullish action in the markets. I think we need to be careful with that, though, especially with Q1 earnings coming up, because if we see signs, large signs of economic slowing or weakening of the consumer, that could totally be something that really brings back recessionary fears. The strong retail report that we got sort of dispels a little bit of that argument, in my opinion, not enough. I think that there is a potential for it to be a false flag, but we're going to have to watch that take place. PCE, when it comes out with personal income and outlays, we want to watch personal income, we want to watch personal savings, we want to find out more information about the consumer and their current behavior. That's going to be very telling for us moving forward from here. With that said, thank you very much for listening. I really appreciate it. If you like this video, please click the like button. Also hit the subscribe button to see more of my videos and click the notification bell so you get notified anytime that they come out. If you would like to be an even more encouraging supporter of my channel, hit me up down in the comments. Say hello, tell me what you liked about the video, and I also don't mind positive criticism. So if there's something you think that I could do better, please let me know that. Whether it's audio, video, commentary, other things that you would like to hear. That's exactly what the comments are there for, and I appreciate it ahead of time. For the most steadfast supporters, please check out the link for the Patreon down in the description. Go ahead and click that link. Come on over and check out my products and services. Check out my private Discord. I would absolutely love to have you over there, and thank you in advance. I am Dr. Stock, Doctor of Education. We'll see you in the next video.